Monday, October 24th, 2022, Monaco 64, home of alternative economics and contrarian views. So today, we're going to look at the silver market, and in particular, the spot price or the paper price, which unfortunately is still setting the scene for the sentiment of the silver market, even though we're seeing premiums very high for the real thing. And technical analysis is a good tool. I've used it for many years. I used to use technical analysis when I worked in the city, in the financial sector, as well as fundamental analysis. But today we'll focus a little bit on silver. It looks like silver, the paper price, wants to take off, and I'll tell you why I think so. But before I start, I'd like to say that this video is sponsored by Golden Wealth. And who's Golden Wealth? Well, they sell the gold coin balance. It's this contraption here, which makes it really easy for you to check whether your 1 ounce gold coins are fake or not. It's one of the tests. You should, of course, go to a reputable dealer when you do buy gold or silver. And yes, I'm gonna leave a link to the Amazon page below in the description. It goes for $25.99, and it's also shipped to the UK. This is the second time I've spoken about the gold coin balance. So now you can listen to what it's about. And have a listen.
The gold coin balance, a simple but precise measuring device for determining if a coin is really gold. Let me show you how it works. Every coin has 3 attributes: diameter, thickness, and weight. For a 1 ounce coin like this buffalo, you can see it has a specific thickness and a specific diameter. Now, although these attributes can easily be duplicated, it's important to check them as part of the validation. With the gold coin balance, here's what you do. First, find the name of the coin on the balance. See, buffalo. Then take the coin and slide it into this little groove to check the width. Next, the diameter. Should fit between these 2 little notches. See, it's a perfect fit for this buffalo. Now, you still need to know the weight. This has always been the tricky part. Unless, of course, you have a sensitive scale with you when you buy, but most of us don't. With the gold coin balance, let me show you exactly how easy that can be. Simply place the coin in the holder in the designated spot and see what happens. Bingo! When the balance tips down, you know it's real gold. If it's counterfeit, even though the width and the thickness may check out, the actual weight won't tip the balance. Let me show you. See, a fake buffalo. Watch what happens. It doesn't tip the balance. So you know the other coin was real gold. The gold coin balance will accurately measure the 7 major 1 ounce investment coins: the Philharmonic, the American Eagle, the Krugerrand, the Canadian Maple, the Kangaroo, the Panda, and the Buffalo.
So now back to the silver situation, and I haven't really looked too much into the technicals lately because the markets have been quite frustrating, I would say. I try to focus more on stacking for the long term. I used to trade gold and silver, but many years ago. I don't do it anymore. I just try to stack the physical. And if you know what's going on, of course, with the monetary system and what has gone on in the last few thousand years, we know that fiat currencies are always debased. Politicians and central bankers, the only thing they know how to do is spend and print, respectively. And that always leads to the purchasing power of fiat currency becoming dwindling even more. Gold and silver, of course, we can't create it out of thin air, so they hold their value, and they they kind of are a very good store of wealth for your savings. But of course, in this day and age, since 1971 and since central banks started this QE scheme after the '08 crisis, even though the Japanese started a bit earlier. They've been trying to tell us that QE, money printing, doesn't cause inflation. And now it's all unraveling, of course. Even Mervyn King, the former governor of the Bank of England, he was governor from 2003 to 2013. He just came out on TV the other day and said that we have rising prices because the Bank of England did so much QE in 2020 and no one was working. He said we printed too much money. That's why we have rising prices. Of course, he probably would have done the same if he was governor in 2020 because he wouldn't have wanted to be the only central bank who that wasn't going to do that, right? So now he's free to speak the truth, but give him credit for that, actually. I've tried to get in touch with Mervyn King, and I have with his secretary, Lord King, and she's been quite nice, and I've told him about that. I told him last year that all this QE was going to cause inflation. Maybe he listened to my emails or read my emails, and it's good to see that he's out there coming out with the truth, not blaming COVID or Putin for inflation. But anyway, let's look at the silver chart and why. And of course, this is the paper price from my system, which is derived from COMEX. And as you can see here, this first chart is a weekly one. So technically, silver, yeah, we're still way above the low from March 2020. I mean, we got to below 12 here in my system. I think most trading was around 12. So we're still significantly higher than that level, but it is disappointing. I know back when the silver squeeze movement started in February of 2021, I was in a big live stream with other people from the silver space, and everyone was very excited. It was a Sunday night. And COMEX was ready to open, and silver went just above 30, and people thought, well, this is it. And I actually said at the time, I would hold my horses. I'm not too convinced they're going to put up a fight. And to be honest, I was right about them putting up a fight. And by they, I mean the JP Morgans, the Bank of Americas of the world, the Citibanks that manipulate the prices. But I didn't expect them to be able to do it for so long. But many of you have seen recently that the silver supplies on COMEX, the registered, and also on the LBMA are dropping very sharply. Some people have calculated that by March there would not be any silver, registered silver left on COMEX. So I think things are changing. The silver squeeze movement is working, but it's taking longer. Everything with precious metals is about patience, I think. And that's why, aside from stacking, you need to live a fiscal life that's honest. And that's what I've tried to do. My wife and I have a budget, have an income that's larger than your outgoings, because if you don't, you're going to have to sell your silver and gold if you keep borrowing and spending and not being careful. But anyway, enough of that. So yeah, the chart doesn't look great, but it looks like it's holding this 18 level here. We've had like a triple bottom, and in terms of just prices, it looks like we need to get back above 21.50 and 22 dollars, sorry, to really see it take off. There might be other levels that people like Michael Oliver from Momentum Structural Analysis looks at, but I haven't looked at it recently. But you can see that in the weekly chart, it doesn't look like we're breaking out or anything, even though this week has started well. but it's the daily and the short-term charts that look interesting. So let's look at the daily chart. So only last Friday, silver traded to almost 18. It got to a low of 18.27, and overnight, and I think it was about midnight London. Well, just around on the changeover from Sunday to Monday, silver actually got up to 1970, and yes, it's corrected now. It's corrected back down, but it looks like it's just filling a gap from Friday. We're right near the highs from Friday, but it looks like the move has been quite, it's been quite a big move from 1825 to 1970. I would say that's significant. So that's why I'm saying here that I think the paper price is ready to take off. And even though premiums are very high for silver eagles, for junk silver, like we see a lot of dealers in the US, UK, having, and even in Australia, having difficulty deliver. Someone in Australia said the silver kangaroos, they have a 8-week wait. But I think what the paper price going up will do, it will improve sentiment in the overall precious metals market. It will also improve, I guess, the performance of the silver miners out there, even though they have been doing relatively well of late. So let's look at the hourly chart. So you can see that silver opened very well last night on COMEX, and it opens at 11 p.m. London on Sunday, and it spiked all the way to 1970, as I said. And and it looks like we're just testing here the high from Friday. So this could be very positive. Of course, when New York comes in, things could change. But I have a feeling, and I try not to predict things like that, I have a feeling that gold and silver could be ready maybe to make a move. We'll have to see. So before we go and look at the markets this morning, just talk a little bit about the political situation, not just in the US, but in the UK. We saw that Boris Johnson has pulled out of the race, so we now have, we'll have a new Prime Minister, Rishi Sunak. Who is the guy? Well, he was the Minister of Finance or Chancellor during the pandemic, and up until recently, he was the guy, along with the Bank of England, who created hundreds of billions out of thin air. He gave these business loans which were like processed with no due diligence whatsoever, probably wasted tens of billions of taxpayer money through fraud. Yeah, he was the guy who really planted the seeds with Andrew Bailey for the massive rising prices and inflation that we have in this country. And I'm not just having a go at the UK, of course, it's happening everywhere else because they all did the same thing. So this guy now, who was not elected in 2019 during the general election as prime minister, he's prime minister. So what do I think of him? Well, he's just another World Economic Forum lackey. His father-in-law is one of the richest men in the world. The company is Infosys, I think, if I'm not mistaken. I'm sure there's a lot of corruption there. You know, that's speculation, of course. And I personally think he's not going to last very long either. He could give Liz Truss a run for her money in terms of the shortest serving prime minister. That's my feeling. Is that a good thing? No, because the other side, they're puppets as well of the World Economic Forum. So, I don't have hope in the political sense. And that's why I think stacking is a good financial way of not supporting these people, because you take your efforts, your money out of the system. As for the US, I guess we'll have to wait until the 8th. And of course, there's all this stuff in the Ukraine going on. The 101st Airborne Division has gone to Romania. They're trying to scare us, of course, with all these saber rattling. And there's the bond market as well, which I think is still very key. We saw a first glimpse of maybe a slight pivot from the Fed through their Fed Whisper, through a Wall Street Journal article on Friday that helped the markets rebound, especially the bond market. So let's look at the markets then now. It's 8:15 a.m. London time. So we've got spot gold, and spot gold as well traded up to 1671 overnight, so it did quite well. But right now, yeah, we're near the lows. We're at 1653. We're down $4. As I said, high was 71, low is 51.76. Silver is trading at 1920, so retesting the highs from last week. It has been as high as 1970, as I said, and we're right near the lows here. The stock market is coming back down. The Dow future is down 60. The NASDAQ is down 25, and the S&P is down 7. The FTSE is down 20. Eurostoxx 50 is up 22. To the currencies, sterling is open quite strongly. It was up about 1% last night. And Boris Johnson announced that he wasn't going to run anymore around just before the markets open in Asia. So it's a pretty damning verdict that the fact that he's not running and the pound rallies. But I think long term, we need to focus on the non-fiat currencies, on stacking, because the pound, the dollar, the euro, the yen, they're all going to sink, as I've said many times before. But right now, yeah, sterling has come back off. It's only up just under 0.5% at 113.50. The euro is down 0.15 at 98.45. And the dollar is continuing to rebound back up versus the yen. So I think the Bank of Japan is going to be very busy intervening, and eventually they're going to have to start dipping on their treasury holdings, U.S. treasury holdings, because they need to get dollars to sell to intervene. And another interesting thing is that the U.S. Treasury has a huge auction schedule this week. They're selling about 120 billion, yes, billion of Treasury notes, and I think bonds as well. So right now, the yen, the dollar, is almost back up to 150 versus the yen. It's up 1% at 149.15. The dollar is unchanged versus the Swiss franc, 99.80. And the dollar is up almost 1% versus the yuan at 628.69. The dollar is pretty much unchanged versus the ruble, trading around 61. So ruble very steady. To the other currencies now. Aussie dollar is down 1%, 63.22. The dollar is up 0.4 versus the Canadian, 136.97. And the Kiwi dollar is actually down just 0.5% at 57.30. To the general commodities, WTI crude is down 1.6% at 83.50. Brent crude is down 1.5% at 90.40. High-grade copper is down just over 1% at 3.42. And U.S. nat gas is down a third at 5.35. Okay, we'll finish off by looking at the bond market. So, yeah, the gilt market, the UK bond market is giving a thumbs up, I guess, for Rishi Sunak for now. The 10-year is down 20 basis points at 384, and the 30-year is down 14 basis points at 392. So here's the guy that spent, I think 400 billion it was in 2020, 2021. And then the Bank of England, of course, monetized that by doing 400 plus billion of QE. And the gilt market is giving him a thumbs up. I just don't understand it. And but that's the way markets work sometimes. They don't go down in a straight line. So maybe this is just a correction. Same thing's happening here with the U.S. Treasuries. Friday, the 10-year yield went up to all the way to 433. And right now we're at 415, down 6 basis points. But the problem with all this volatility is that it creates illiquidity, because the people who make markets in these bonds, because these cash bonds, these government bonds, they're not traded on an exchange. They're traded over the counter, basically. So the people who make markets on these, they're going to be very skeptical to make a very tight bid and offer quote and size. So it creates illiquidity. And coupled with all the supply that's coming this week, I could see a rocky and volatile government bond market, especially treasuries. But this is happening everywhere anyway, because I think the fiat currency system is coming unglued, and government bonds are a key, they are the fiat currency system, right? The government bonds. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great day and a great rest of the week. Take care. Bye.